Hey, what's going on, everybody, and welcome to Blue Collar Money Manager. So today's video is going to be about looking back at 2025, some financial wins we had last year, and then looking at my financial goals for 2026. No guru stuff, no clickbait, just a real blue collar working American trying to do the best he can financially. So in 2025, my wife and I sold a commercial property that we owned for over 10 years and got hit with a pretty large tax bill due to the sale. Even with the long-term capital gains treatment, we still have to write a pretty large check to the IRS here in a couple months, and it's going to hurt pretty bad. There's no sugarcoating that, but we believed it was the right time to sell that building. The property was becoming harder and harder to rent. Insurance costs were rising fast, and it was an aging building that was going to require more capital down the road just to maintain it. The returns were no longer close to that 10% benchmark that I require of my financial portfolio of my investments, and I didn't want to keep feeding money into something that wasn't pulling its own weight. I feel like we sold at a good time, but timing the sale also meant accepting the tax consequences with the sale of the property. Instead of just kicking the can down the road, we decided to take the hit, pay the taxes, and move the money somewhere else, essentially. Another win we had in 2025 was that my wife and I became debt-free, mainly due to the sale of the building. That was a goal that I had had for many years, and finally reaching it took a massive weight off my shoulders. No mortgage, no consumer debt, no payments hanging over us at the end of every month. But really something interesting happened toward the end of the year of 2025, and that is our household expenditures, our household spending pretty much exploded. It turns out when you don't have a mortgage, you can pretty much justify buying whatever it is. It's so easy to hit that buy it now button on Amazon if you don't have really any notes. And yes, my holiday credit card is still haunting me in this new year. So really, we could live on just a few $1,000s a month now, because like I said, we don't have any real notes anymore. But if we don't keep our spending under control, then paying off our mortgage and my truck didn't actually make financial sense, right? They were both pretty low interest loans. So debt freedom, in my opinion, only works if lifestyle creep doesn't erase the benefit. Instead of paying a mortgage, you just take that $1,200 a month and blow it. You should take a good portion of that mortgage that you were paying and invest it into something else, some other asset, stock market, etc. In my opinion. So my current financial philosophy. So in 2025, I built a detailed plan to reach kind of lean financial independence. The goal was to safely withdraw about 3.5% from investments. So roughly $4,000 a month is what I was wanting, or $1.33 million invested. And that way I could withdraw that $4,000 a month roughly without touching the principal. So I track everything in a spreadsheet that keeps me accountable on my spending, my savings rate especially. And it really just helps me to visualize, my plan and my progress. It's somewhat encouraging. So one thing I always say is this, and I tell a lot of people this. So in my opinion, retirement isn't really an age. It's not, hey, you're 62, you can get Social Security, you can retire. Retirement is a number. And basically, in my opinion, you take your monthly expenses and you figure out what it would take to sit at home, not do anything else, withdraw your monthly expenses every month without touching your principal. And that is the basics of financial independence. Retire early. That's the basics of retirement in general. Obviously, there's a lot more to it, but just on the surface, that's what it takes. Is you have a lump sum of money, you play the 4% rule, or in my case, 3.5% rule, a little bit more conservative, and if you can cover your monthly expenses, then technically you can retire. And it's more complicated than that, but that's just a rule of thumb, and it's very encouraging that you don't have to wait till you're 62 to retire. You can retire if you're 42, if you're able. Let's see. So in personal finance, a lot of people obsess over deferring taxes, about 401ks and traditional IRAs and all that good stuff. And I get it. Writing a big check to the government in April every year or whenever feels terrible. I mean, you might as well just burn your money, let's be honest. Especially when you see all the waste and the fraud in the world, in the United States, I'm sorry. But sometimes paying taxes is the right decision. Sometimes a Roth IRA beats a pre-tax account. Sometimes realizing gains now beats holding onto a mediocre asset out of fear, like our building. Our building wasn't producing the rate of return we expect, so let's just cut the cord, pay the taxes, put that money elsewhere, which is what we did. We chose to lock in the profit on the building and move on rather than continue investing in something that wasn't performing. Now we obviously paid off our house, but we also have that money and sitting in a CD earning like 3.5%. At least it's doing something, and we don't have to work for that rate of return of that money that was in that building's equity. So my advice is simple. Run your own numbers. Make decisions based on your situation. Everybody's lives are different. Everybody has different goals. Personalize your financial plan to yourself, your family, your household. Don't let some guy on TikTok or YouTube dictate what you do with your money. Think about it. Use your brain. Do your own research. Big financial decisions deserve patience, discussion, and clear thinking, because one bad move can redirect your financial health for years. If you invest in a bad asset, if you choose to build a spec house and it sits on the market for 2 years, and who knows what could happen. It could, especially with just normal Americans with a normal, even a decent income, making one bad investment can hurt you for 20 years. It could add 10, 20 years to your working life if it's bad enough. I've unfortunately have seen it with other people. So let's get to my financial goals for 2026. This is where things change. In 2026, I'm stepping away, at least temporarily, from the strict FIRE plan. And it really kind of hurts to say that, to be honest with you. But my wife and I have made the decision to finally build our home, our forever home, if you will. And that's definitely shifted my priorities. Instead of optimizing for early retirement at all costs, cutting all corners, not spending a dime, working to make that spreadsheet look better and better every time I pull it up, I'm now focused on earning more income without becoming a normal consumer again, if that makes sense. I don't want to finance lifestyle upgrades. I don't want to borrow my way into comfort. I don't want to borrow 100% of this house that we're about to build. And that means getting more aggressive, not with risky investments, but with my earnings. So that all boils down to my number one goal for 2026. And that's simple. I want to earn an extra $1,000 a month some way, somehow. In the grand scheme of building a new home, that's a drop in the bucket, and I get it, but it definitely puts me on the right path to passive income. That $1,000 a month might lead to other businesses and other opportunities, I feel like. And it's something I really hadn't focused on in the past. I focused more on going to my job every day and saving what I can every month, and that's it. Now I'm looking more toward, hey, how can I earn more money? Different businesses, that type thing. So I feel like that goal is achievable, and it forces creativity, taking content creation more serious, building a side hustle, a small business, whether it be mowing grass, cleaning gutters, whatever, exploring smarter investment opportunities. Talking to a guy at work, he's all in this group real estate opportunities, building apartments and that type thing, where a group comes together and builds a massive commercial property. This thing, I think it's syndication groups or anything like that, something like that. But just stuff like that, just really, spread my wings a little bit more, getting out there a little bit more, and looking for better rates of return and more opportunities. So really, that extra $1,000 a month is about momentum. It's not just the money. I know $1,000 a month isn't going to do nothing when you're trying to build a $500,000 home, but that $1,000 a month, I feel, will lead me to other opportunities. And obviously, I plan to document exactly how I go after it, the wins, mistakes, and all. So if you're in a similar position, you can see what actually works. I'll be pretty open with it on what I do, whether it be digital products, mowing grass. I have no idea, but In 2026, I definitely want to make it happen. So I'm not here to sell you a dream. I'm just building my financial life in public, if you will, one decision at a time. And if you want real numbers, real progress, real lessons from a normal blue collar American, then please stick around.